let's get started. Great. So finally we started with some trading stuff, huh? You've been waiting for it. Here you go. So look, just a little bit of history to be on the same page. This guy you see right here, it's Manehisa Homa. He was a Japanese rice trader, and he's considered the father of candlestick charts and technical analysis. Notice that this was a while back ago, right? 1724, no, when he was born. So, look, during those times, between Sakata and Osaka in Japan, there was a lot of rice trading going on, and rice is very important in Japan, a very important commodity. Now, look, the legend says that he had a network of men spread across 600 kilometers just to communicate market prices. So imagine, this guy was really obsessed about price. And here's the thing. He spent 60 years of his life studying how prices behave, how patterns, are they seasonal, the market sentiment, does it affect prices? If his investor feels optimistic, will it have an impact? And he was plotting all this information into these charts. And he's the creator of the Japanese Candlestick. Now, how do Japanese candlesticks look? Easy. Let's take a look together, no? Okay, let's start by saying one thing. Each candle represents a time period, okay? So let's say that all these candles we have right here, it's 5 minutes, no? So look, in this 5-minute candle, what do we see? We have 4 values, okay? First value we need to look at is the open price, which is by the time the period started, what price had the asset. Then the close price. By the time the period ended, what was the closing price, okay? The last price available in that period. And then the highs, how high it moved during that specific period, okay? And how low it moved during that specific period. Now, why are candles different? Why do we have one green and why do we have one red candle? No? Easy. So if the price opens here and it closes lower than when it opened, right? It's a red candle, no? Now, if the price opens here and it closes higher than when it opened, it's a green candle. Very simple, right? Great. So this is how a candlestick chart looks. Now we have our y-axis, which is price, and we have our x-axis, which is time. In days, can be minutes, hours, seconds. Remember, this is customizable. We'll talk about it in just 1 second. So bear with me. So this candlestick chart solves the squeezing problem. Now we are able to fit much more information than just a line, no? Because the line tells us very little. And why do we care about it? Okay, we're gonna see it in a bit, 1 second. First of all, an interesting fact to understand, the line chart you see, which is available also on trading platforms, is composed of closing prices. So you see, this is a green candle, right? So we know that it opened here and we know that it closed here, no? And we know that red candles open here and they close here. So technically what we're looking at is a more advanced representation of the line chart, no? So if we wanted to draw a line chart, we have to do this. We have to chase each closing price and draw it. 1 second, I'm doing it right now. This is not scripted, no? I'm doing it on real time. But I'm doing it to show you a very important point. Look. Right now, you see this. This would be your line chart if you were looking at it in your trading platform. Do you see how much data you're missing from the picture? For example, this huge candle right here, the red one, no? Think about it. Something happened big that day that pushed the prices down so hard, and they opened at a certain level, they closed at a certain level, but all you would be looking is this, a line between this point and a line between this point. You're missing all that information. And why it's important? Well, when we get to candlestick psychology, we're going to evaluate this much better. But see all the information that you were missing, no? Great. Now, one very important point, the candlestick time periods. This is not an accurate representation of data. It's just an example for you to understand what's the problem with the time periods of candles, no? Look, candles can have any period you want. Can be 1 hour, can be 1 day, can be 1 week, 1 month, 1 year, doesn't matter. No, you can make candlesticks however you want. Now, what is the problem? A lot of people, when they're starting to trade, they open their trading platforms and they put 1 hour charts, 1 hour candlestick charts. So this means that each candle is going to be worth 1 hour of data. And they make decisions based on that, and that's super wrong. I'm going to explain to you why. Maybe you're looking at this hour chart, right, made of candlesticks that each candle has a period of 1 hour, and it looks like it's going down. You see this like, oh, great, it's going down. So I'm going to make money when it's going down. I'm going to blah, 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 blah. Okay. But then you look at the daily chart, and actually it was like this. It's like, okay, it's going super up. It's doing better than ever. So What is the problem? We need to learn to analyze what is happening in several periods, okay? Because it's never the same. It can be going down for the past 3 hours, right? And then 5, 10 hours, and then it can be going up during the last 20 days. And that's when you need to understand you always look at candlesticks in several periods. You never go for one, no? And remember, each candle contains OCHL for the time period it represents. What is the OCHL? You're gonna see it in all the trading platforms, in all the brokers. Easy. Open, close, high, low.